most business owners are running their numbers off of three things. It's what square or stripe says, it's what's in their bank account, and it's what's in their gut, how they feel about it. And sadly, none of those three things are the thing that you really need to be running your business off of. So today I'm gonna dive into the actual three numbers that you need to be using to make all of the important or most of the important decisions in your business. And I'm not even gonna put them behind the cliffhanger, or am I? I'm Albert. My name is Albert C. Hurston Jr., CPA, or Albert the CPA. I am the owner, founder, and CEO of Right Choice Accounting Solutions. I run it with my amazing, immaculate, gorgeous wife and our amazing team. We're your full service, one-stop shop accounting and tax office. Everything from bookkeeping to high-level strategy, you get that here at The Right Choice. So, back to the three numbers. I like cliffhangers. I might put that in here, Rachel. That might be my thing now, cliffhanger before we. But the three numbers that every business owner needs to actually understand are revenue, profit, and cash flow. So again, we need to move away from Stripe or Square or whatever the sales processor is saying. We need to move away from the cash in the bank and actually dive into our numbers. And in this video, I'm going to explain exactly what these numbers are and why they matter. So without further ado, let's dive into revenue, because this is the one everybody really understands, really knows, and really thinks that is like the key number. So revenue, or top line sales. Revenue or sales is righteously all of the income that came in by selling your service or product. It's every invoice, it's every time a client pays you, it's every sale on your payment processor. It's just the top line. This is everything. So when you hear somebody say, I got a $5 million company, chances are that's a $5 million revenue company and not profit. So doing $5 million, or let's make a smaller number, doing $1 million in revenue literally means nothing on its own, nothing real. It just means $1 million came through the door, but it doesn't really tell you how much of that money is actually being kept. So making decisions based on being $1 million company out of context can be a disaster. And if you're in this small business online world, we've seen a lot of 7-figure companies come and go just because they were 7-figure top line and they were negative bottom line. So understanding revenue and this next number is how you protect yourself from that. So the next number, not something that you never heard of, is profit. So the best thing that a business owner can do for themselves is understand the relationship that exists between their revenue and their profit. And the difference between revenue and profit is literally, what are the operational expenses I am using to run my business? How much of my revenue is going towards my team? Or matter of fact, higher up, if you sell a product, how much of my revenue is going towards making this product or selling this thing, my team, my marketing, my operations, my software, my commission. If you have sales reps, understanding that relationship between marketing and ad spend to commission and sales rep to actual revenue is like key. But you have to understand what happens with that revenue before it gets to the bottom line of that P&L, that profit line. And that's literally like a game changer for a lot of people, because a lot of small business owners are estimating. They know that they made about this amount of revenue. They say, hey, about this goes to team, about this goes to software, so I should have about this. And that's where we're messed up. Almost every small business owner I've ever asked how much it costs to run their business has drastically underestimated that number. Not like a little bit, not like about 10. They may say about 10, we get in, it's about 20. They may say, oh, it costs us about 80,000, we get in, it's like 140. It's always drastic because there are so many little small, inconsequential, like under the radar overhead things that just don't strike top of mind. A lot of people know how much they're paying in team. A lot of people do not know how much they're paying in software. How much of that ad spend actually went through and cleared. How much, y'all get my point. I won't beat a dead horse. That's good enough, right, Rachel?
That's good enough.
Good. So to simplify, we talked about revenue, which is everything that came in, and we talked about profit, that's really revenue minus operational expenses. And just for the record, an operational expense is anything that is ordinary and necessary to run your business. So of course, softwares, team, marketing, furniture and fixtures, stuff like that that actually makes sense and can be proven to be a part of you running your business. These are what we consider ordinary and necessary operational expenses. Because to call a spade, you can be successful by every social media metric out here and still have nothing left at the end of the day. So the difference between a social media popular baller and an actual business builder is just understanding these numbers. So that's revenue, that's profit, and here's the king. If you got time, I'm gonna start doing these live so you can say it with me. What's king? Cash is king. So the most important number is cash flow. In order to get to cash flow, though, you have to understand revenue, you have to understand profit, you have to understand the relationship between them. But there are differences between cash flow and profit. A lot of people who actually have like bookkeepers and stuff like that, they may have their profit, but a lot of those are the people who know that they're profitable and somehow still don't understand why the profit they're supposed to have isn't matching what's in those bank accounts. That's a cash flow thing. So when you get that pain, like when you're like, man, I know I'm making money. My P&L says I'm making money. My bank account says I ain't got nothing. That's a cash flow thing. That's a cash flow understanding thing. So cash flow is literally the actual movement of money in and out of your business. And a lot of times this becomes like a timing thing, right? Because in business, we're committing to things. We're saying we're going to purchase things. When you have a team, payroll comes on a specific day. So if you have a $25,000 payroll and $50,000 cash in your account, you cannot spend that $50,000 without first considering that $25,000 payroll hit that's coming. And that's everything, softwares and all of that stuff. I won't beat a dead horse. But the biggest difference between cash flow and profit are the things that are on the P&L that don't hit cash flow and the things that hit cash flow that are not on the P&L. And those things are non-operational cash flow expenditures. I was going to say expenses, but expenditures. And the big ones are owner's draws. A lot of people don't understand that the money they take for themselves is not on that P&L. So if you have a $10,000 profitable month, but you took $12K in owner's draws, that bank account's going down $2K. You may have a really profitable business on paper and your cash actually goes down. And then you take, so your owner draw, and then you have these credit card payments and these loan payments, right? So your loan payment does not touch your P&L. So for example, if you had a $10,000 profit month, you spent $2,000 on those credit cards, you took $10,000 in owner's draw, your bank account's gonna go down by $2, and your P&L is gonna say it was a great month, and you're gonna be looking at cash like, man, what is going on? Another one, we got credit cards, we got owner's draws. A third one that really gets people are those loans. Like there is a lot of, especially in online business, there's a lot of like, come get funded, come get funded, come get funded. Y'all, debt isn't funding. So I just want to really make sure that people understand that taking on debt has a cost. And that cost doesn't creep up until you really get into the nitty gritty of paying back that loan. But that loan itself is money that's coming out of your bank account. It's literally coming out that's not touching your P&L. And then on the other side of it, there are times you're swiping your credit card to pay for things. Like most of our softwares are going to come out on a credit card, right? A lot of us who run ads, that's coming out on a credit card, right? Those things aren't even affecting cash directly. So the P&L can be super misleading. But what actually hits that cash flow is not what you swipe. When you swipe the credit card, that hits P&L. When you pay the credit card, that hits cash. And you have to understand the difference, because what you need to make good decisions in your business is a cash flow projection. And all that means is based on the things that are coming in and out of cash, we're projecting what's going to happen next with cash. And that answers, can I afford to hire this person? Well, let's see what that does to cash. Well, okay, if right now, 2 months from now, we're expecting cash to be at 20K, I want to hire this person, they cost me 5K. If I hire them this month and pay them next month, that means now after 2 months, my cash is going to be at 10K. Are we okay with that? Cool. But you don't want to have 10K and your cash in 2 months. If we don't do something drastic, it's going to be at 5K, and you hire this 5K person and you just bet on yourself, because betting on yourself has to even be strategic as well. A lot of us who build businesses, there are times where you have to do things that don't make logical sense, but you still have to do those things based on logic and not logic, but data, and it has to be a plan. I always say it's never if, it's always how and when, because everything we do doesn't have to be done now. But moving along, so understanding cash flow is really what business owners need. But back to the theme of this, I think I've covered the three numbers. So instead of it being your Stripe and Square, instead of it being your bank account balance right now, instead of it being like you stepping out on faith or making a gut decision, it needs to be based on revenue and profit and the relationship between the two, and profit and cash flow and the relationship between those two. And that's pretty much it. Your P&L is going to tell you everything you need to know about revenue and profit. Your cash flow is going to tell you everything you need to know about what's going on in that bank account. And most business owners, if they actually try, they can put this stuff together, especially if they understand the value of investing in good accounting. A lot of people have bookkeepers. A lot of people don't have good accounting. Bookkeeping is reactive. You want some proactive accounting in your business. I'm talking budgets and projections and actual decision making tools. So the real cost of confusing all these things, right? It's going to be overspending. It's going to be spending cash you don't have. It's going to be hiring people that you can't afford. It's going to be doing a bunch of things that are mistimed most of the time. Most of the time, it ain't even a bad decision. It's just making the decision to go forward at the wrong time. Making the decision before cash flow said it made sense. Making the decision before the business actually had the money to do it. Because a lot of times people get a no, and the answer ain't no. It's really just not yet, not right now. Or a question needs to be how. It's never no, just always when and how. So that's it. I'm going to take it to the bridge. These are three numbers. One of them tells you how much came in. One of them tells you how much you kept on paper. And the most important one tells you how much you actually kept in real life. And once you know that difference, you are powerful. You are a business building machine. And that's what this channel is all about. We make business building machines. Anyways, I'm going to ease on out of here. Go ahead, comment, like, subscribe, or like, comment, and subscribe. And I guess that's it, Rachel. I'm going to see you in the next one.